For decades, investors believed Warren Buffett would never step away from the stock market machine. But in 2026, something changed that sent shockwaves through Wall Street. Berkshire Hathaway is now sitting on an enormous mountain of cash. Not millions, not billions, but nearly $189 billion in cash reserves. And when Warren Buffett holds this much cash, smart investors pay attention because Buffett has survived every major financial crisis of the modern era. He survived the dot-com bubble, he survived the 2008 housing meltdown, and he survived the panic of 2020. Why is Buffett suddenly acting defensive now? Because he may see something most investors still refuse to acknowledge. The biggest wealth transfer in nearly 80 years may have already begun. History tells us that wealth never disappears. It simply moves from one group of people to another, and every 80 years, the financial system experiences a massive reset. The last major reset happened during the Great Depression. Millions lost everything while a small group became incredibly wealthy. And now, many analysts believe we are entering another dangerous cycle. The warning signs are everywhere. Debt levels are exploding across America. Credit card balances are hitting record highs. Commercial real estate is collapsing in major cities. Banks are becoming increasingly nervous behind closed doors. And Buffett appears to be preparing for something enormous. Remember this carefully. Buffett does not panic, he prepares, and preparation is exactly what the wealthy are doing right now. Behind the scenes, smart money is quietly leaving overpriced assets, especially overvalued tech stocks, especially speculative real estate, especially assets fueled by cheap debt, because cheap money created the largest financial bubble of modern times. For years, central banks flooded the system with liquidity. That easy money pushed stocks to extreme valuations. It pushed housing prices beyond affordability, and it convinced millions that markets only move upward. But Buffett understands something most people forget. Every bubble eventually bursts, and when it bursts, cash becomes king. Again, that is why Buffett's cash pile matters so much. He may be waiting for the biggest buying opportunity of a generation, but another investor has been sounding a similar alarm. Robert Kiyosaki believes the great crash has already started, and unlike traditional investors, Kiyosaki is obsessed with hard assets, assets that cannot be printed by governments, assets with real-world scarcity. Silver has become one of the biggest themes among wealthy survival investors, because silver is both money and an industrial weapon. Electric vehicles need it. Solar technology depends on it. Advanced electronics consume enormous amounts of it, and if financial panic grows, silver demand could explode. That is why wealthy investors are repositioning quietly, not with loud headlines, but through silent accumulation. This is exactly how wealth transfers begin. The public buys hype, the wealthy buy fear, and right now, fear is starting to spread across global markets. Housing markets are slowing rapidly, layoffs are increasing across major industries, consumer confidence is weakening, and millions still believe the system will magically recover, but history says otherwise. Every major collapse follows the same emotional pattern: excitement, greed, denial, then panic. And during panic, fortunes are made, because crashes create discounts. That is Buffett's true advantage. He waits while others panic, then he strikes when opportunities appear. The next 2 years may define an entire generation of wealth. Some people will lose everything chasing bubbles, others will quietly build life-changing wealth. And the difference may come down to preparation. Oh, What should intelligent investors focus on now? First, liquidity. Cash creates flexibility during chaos. Second, avoid emotional investing, fear, and greed. Destroy more portfolios than crashes themselves. Third, understand hard assets. Assets with scarcity may outperform paper wealth during instability. Fourth, think long term. Buffett became wealthy because he mastered patience, and patience becomes even more valuable during panic, because the greatest opportunities often appear during the darkest moments. This is not just another market correction. This could become the defining financial reset of our era. The transfer of wealth has already started quietly, and most people still do not see it. But Buffett's actions may be the loudest warning of all. The question is no longer whether change is coming. The question is, who will be prepared when it arrives? History rewards those who move before the crowd, and history punishes those who ignore the warning signs. The biggest wealth transfer in 80 years may already be underway, and your next decision could define your future. This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.